Hey guys, Pure Living on this channel is for educational purposes only and is not intended as financial advice. It's been a pretty bullish day. It's been 2 weeks since I've done a video, mainly because we haven't really done anything, while we've also secretly crossed over a pretty key bullish area. This is coin360.com, just looking at the heat map, which is what this is called if you are unfamiliar with the graphic. So BTC and ETH have done very well today. BTC's probably outperformed just about everything that I can see on the heat map here, even most of the alts. I mean, the BTC's in double digits. ETH briefly was at 10%, I think, somewhere above 220. Looking at all the market caps, I usually always have these like next 5 or 6 charts up on my screen, just because they give me a roadmap of like what's going on in the market. So to see everything on the up and up today, I mean, XRP sort of was a jump the gun yesterday. It was up quite a bit relative to everything else. Link isn't on here because it doesn't load for me. Sometimes it has trouble loading, but it's somewhere in here. Over the past couple weeks, Tezos has really outperformed everything else. But since then, BTC was sideways, broke up today. ETH has had this rising wedge, which I'll show, that I was afraid was going to break down. That really prevented me from like massively sizing up on leverage because I didn't want to be on the wrong side of that wedge. It looked very promising to the downside. In my opinion, it's BTC's rise today that prevented ETH's doom today, because it was bear divvying, rising wedging, all that sort of thing. Everything else is kind of non-exciting. I mean, these alts here have also done really well. XLM88, XMR Tron. They're probably quietly outperforming like most of this stuff up here, barring like Tezos. I mean, just looking at the rate of change, you can see that they've outperformed most of the other stuff in the top 15. This is Tether, price of Tether on the top here in the red, and price of BTC in the white line here. And the yellow highlights are the times USDT, USD drops below $1. The general logical makes sense theory is that if Tether's below $1, we should be bullish for BTC or crypto in general. If there's less demand for Tether, it's likely because it's flowing into BTC. That's my general logic. We saw that here, didn't necessarily see it anywhere else. I mean, oddly enough, leading into the end of the year, most of the times Tether was below $1 was bearish for price. I don't know if there's some lag issues with that. Like, I don't know. I can't explain it. I don't know. The other times Tether's below $1 is just market confidence. So this was when the insolvency issues came to head, the transaction delays came to head. So this is the market responding to that, saying, I don't trust Tether anymore. Since then, though, it's really held at or above $1 pretty well. So surprisingly to me, we've been this bullish and Tether's been above $1. So maybe there's some demand stuff I don't know about in Asia or elsewhere. I mean, all the stable coins, they just keep printing. And we're still above $1, still above $1. There probably isn't a massive arbitrage trade until it's like, $1.01 or higher, just because with fees, it's going to be hard to arb the differences out on a large scale. So maybe for like retail people, it's worth it. But for institutional investors, it's not really worth arbing this until it's like way off its mark, just because of fees. And in general, I think you expect Tether to have a premium because of the fees. Like, it should always be slightly above $1 because of the fees. It should never really be below $1 if there's two-way flow, market conditions are normal, that sort of thing. Looking at the futures forwardation or backwardation on the bottom here. So this is spot versus monthly futures in the blue, the turquoise, and weekly futures in the yellow here. This is BTC on the left, ETH on the right. And you can see me drawing this giant rising wedge. I don't think there's any doubt in any person with a rightful mind in TA that this was a rising wedge. You don't see higher highs, higher lows, squeezing like that, unless it's a rising wedge. I wasn't short, it wasn't long. It is what it is, but in my opinion, that was a rising wedge, a really good example of it. And most people come back at me and say, well, Josh, in crypto, rising wedges are bullish. So No surprise we broke up here, maybe. But to me, the BTC breaking up, it really helped ETH not just fall down to 170 or lower. But the other thing I'm noticing is that futures premiums are not positive, they're negative. So there's a backwardation instead of forwardation. This is saying the monthly contracts are less than the spot price. Same thing with ETH. This is good if we are trying to fuel a rally, which I think we did today, I think by flipping from bullish to bearish on the premium versus backwardation, whatever words you want to use to describe that, forwardation, backwardation. That could be a signal that there was some sort of short squeeze today that happened to fuel this. I think it takes a lot to have this kind of move on any given day, plus 10%. I think the short squeeze theory is sound, especially if you look at where futures were leading into this. So going forward, I'd expect futures to premium to grow. So today's April 29th. I don't know when the OKEX future rolls over, the quarterly. I can't remember exactly. Because if it's too close to the expiration, we won't get a massive futures premium. But if there's a month or more, we could really balloon out the premium. Same thing with ETH. All the same thing applies, looking for forwardation premium over backwardation, which is where it was. If it's bullish and going to stay bullish, it says there's market confidence that the price tomorrow is going to be higher than the price today, or the price at settlement is going to be higher than the price it is today. Looking at dominance, a lot of people were looking at this leading into today, thinking that it's alt season. So this is the 200-day moving average, which is the fill, and the 50 EMA is the green line here. In general, it's only been alt season so long as we've been below the 200-day moving average, which is currently the case. It's a big sloppy mess. I don't see a bearish continuation picture here just yet. We could even argue like an Adam and Eve situation eventually, which would be, bullish for Bitcoin season and not altcoin season, meaning Bitcoin would be gaining more over the alts. So I don't think there's anything here that you can really say like, yes, this is bullish for alts, this is bearish for BTC or anything like that, just by looking at it. I think it's just too much of a mess right now. We're going to need a couple weeks for any sort of useful signal here. And clearly the death cross happened on earlier this year, and alts have done really well relative to BTC. I just don't know if that's going to maintain leading into halving, especially, which is in 13 days. Or not, well, about 13 days, 14 days, May 13th. Looking at CME futures contracts, in general, my thesis has been leading into the rollovers. We have high periods of volatility, and these biannual contracts tend to be one direction in that they're either up or down. They're not what happened to this contract, which was we got higher highs and lower lows from the open. We usually don't see that. So this contract definitely broke the previous trend, I guess, of either up or down. But looking at how volatility rolled over, there was some volatility leading into that and a little bit after that. These contracts are a little different since CME added four or five contracts around December 16th, December 30th. I think that was in response to the upcoming halving. It gave people more ways to play the date itself. In general, just looking at this, there's always an expiration each month. So May, June, July, again, April, May. There's more contracts out here. Just in case you're curious of like why the schedule is the way it is. There's always an expiration every month, but the duration of the contracts themselves change. I just like to look at Coinbase versus Bitfinex. So this is Cash versus Tether, basically, is how I see that. And if Cash is leading, so Cash was clearly leading futures because futures were in backwardation. Cash is clearly leading Finex, which was more bullish on Coinbase, for example. This is what this metric is down here. It's Coinbase minus, or Bitfinex minus Coinbase, right? Yeah, so if Coinbase is leading, then this should be negative. So we were leading all day over the past few days, really. Coinbase was leading Bitfinex. So in general, that has always been bullish. Not anything that you could use alone to make decisions on trading, but it helps add to the story, the bullish story. Also been watching the VIX volatility index. Anytime we've been above 40 on the VIX, it's been a good time to buy BTC. Historically, we basically reached a relative multi-year all-time high since 2008 on VIX around March 12th. So VIX wants to go back to zero. The volatility wants to decline over time. So that's what you're seeing here, this decay into the VIX. Similar to Bollinger Bands, you get these squeezes in volatility. You get no volatility for an extended period of time, and then you get explosion in volatility, which is what we see here. So VIX going to zero is bullish for BTC. And on the bottom here is the SPX correlation to BTC, also declining over time, which is generally what you want to see if you are bullish crypto. I don't think we are bullish as an asset if we're tied to traditional markets in general. You can see over time we are correlated, not correlated, uncorrelated, that sort of thing. But there are definitely periods of high correlation, as was the case since January. This is the 30-day rolling correlation, so it'll change depending on if you look at like the 90-day or the weekly correlations, whatever. I'm seeing a lot of charts of the BTC versus SPX is the lowest correlation we've seen in a long time right now. And that's true depending on what your time span is here. So we'll start with the weekly and go to the daily and stuff like that for the cloud. But I mentioned this in the last video. I was talking about the 100 EMA versus 100 MA cross. Not too many people talk about this. This is like a secret hidden gem of a signal. There really isn't that much history, for this cross, but if you treat it like a golden cross, death cross sort of thing, just historically, if the EMA has been above the MA, I think that's my colors are right. If the EMA has been above the MA, we've been bullish. I mean, that was 2017, 2016. Previous halving was here, and then, we're off to the races. Very similar story here. I wouldn't say it's exactly the same. There's a lot more chop leading into this 100-100 cross. And it's a bit odd that we were as bullish as we were with a bearish, arguably, cross, or should have been bearish cross. So it looks good for up in that the EMA MA cross is correct. I don't think it's an actual signal on itself, but interesting that it is where it is. It is bullish, and we're moving up. So again, there's confluence there. I like to look at the 20 SMA as well, which is the median line of the Bollinger Bands, which is what these are. This is the weekly chart again for BTC. And you can see we popped up above the 20 SMA over the past few days. Extremely bullish historically. All of 2016, 2017 was above the 20 SMA. Most of 2018 was below the SMA. We were bearish. As soon as we got above in 2019, we were bullish. And it's been a garbly mess ever since then. So I suspect this will need to consolidate a bit before making any insane moves north or south, either direction, just based on volatility principles of Bollinger Bands, that sort of thing. Unless we're just frankly massively bullish like we were in 2017, we'd have to see week over week pushing of the bands. So Bollinger Band expansion. You typically don't get expansion unless there's contraction first. If you get a squeeze, that's what you want to see for a big move. So I'd be watching, if we keep going from here to the upside, I'd be watching 10.5, 10.6, just because it's the top of the bands. And we typically, chill out, essentially, on these volatility bands. All right, looking at the daily cloud. Now, I wrote an entire article on this a few days ago, a week ago maybe. I did a video for this on TradingView. Like that's how certain I was of how bullish this was going to be. So if you're not familiar with the cloud, if we're above the cloud, we're bullish. If we're below the cloud, we're bearish. It's just dynamic support and resistance, similar to EMAs, MAs, all that sort of stuff. Looking at April, again, as soon as we were above the cloud, boom, off to the races. Earlier this year, we were above the cloud. We were bullish. Once again, we're above the cloud. Very bullish. What you want to see now is this green cloud form over the next few days. I suspect it will. It'll flip bullish maybe today, maybe tomorrow. And then it's sort of decision time. Typically we don't move too far outside of the mean, which is the Kijun, the red line here. So it's going to want to either go flat or return to the Kijun. And you see that all the time, always. It's just a principle of the cloud. It doesn't move sideways, return to the mean, return to the mean. Here, return to the mean. So the mean hasn't caught up with price yet. And the mean is still at 66.50. This will move up over time, especially after today. So definitely going to have to watch, how high do we get over the next few days with the Kijun being this far down. Now you can see for the April rally, we didn't actually touch the Kijun pretty much the entire time, until the end. Doesn't always happen. So it's, if we're mega bullish, then we just keep going, obviously. But same thing here. We didn't retrace to the Kijun until it was over. Same thing here. Didn't retrace to the Kijun until the bear move was over. So what you can do is look at lower time frames if you want, but then it gets super subjective. I just like to think if we are very far apart from the Kijun and we're flat and we're sideways, we're probably going to return to the Kijun, which is, it'll pull up over time. You're just going to have to watch it, but that's the key level to watch. So I'd watch the Kijun, I watch the cloud, which is around 7.2. If we tumble back to 7.2, which would take one hell of a selling off rally to do, there'd definitely still be support at 7.2. So I suspect this will chill out between 8.1 and 9K over the next 2 weeks, probably. I really don't think this will keep going, even though halving's in a couple days. Here's more evidence for chill out mode. So this is the 5200 EMA cross. You can see April, we got the golden cross off to the races. We got the death cross in end of last year, and we didn't really go anywhere. It stayed sideways. The death cross here was late, so it was after the move happened, which is what you typically see. And you also don't typically see this many crosses on the daily. Like, this is just how volatile we've been. We've just been all over the place. So looking at where we are now on the 5200, still not cross bullish. We're waiting for that. We are above the 200, which, as soon as we got above the 200 in April, that was all it took, really. And then we just off to the races. But for me to be more confident, I'd want to see this 5200 cross. I'd want to see a retest of the 200 even. Similar to that Kijun bounce, we didn't get it in April. We were that bullish. A lot of this was plus token Ponzi stuff, but just comparing April to now, it's completely possible we'd never get this 200 bounce. We'd never get the Kijun bounce. I just would be more confident in the rally if we do. And again, you can go to lower time frames and, finagle the 12-hour and look at those crosses, look at that cloud. Yearly pivot is also at 8.1, so we're above that. So if we tumble to 8.1 or 8, plenty of support there. Upside is just previous highs, 10K, 10.6, like I was saying with the Bollinger Bands. And then the yearly pivot to the upside is 13K at the R1 there, which I don't expect. I'd be surprised. I'm not going to bet against 13K here, but I'd be very surprised if we're at 13K over the next, 20 days. Flipping to ETH here, very similar picture. Had the drop in mid-March, and it retraced pretty much everything. Back above the cloud now. You're waiting on that bullish Kumo twist. ETH, the resistances are pretty much at the psychological resistances, so 250, 300, 350. Those will be the levels to watch on the way up from now on. But again, this Kijun is really far away from the price currently. ETH, I think, more so likes to retrace to the Kijun a little bit. Did so here in early 2019. It did so in all of mid to late 2019. Just repeated Kijun touches, and then it tumbled off. So support for ETH would probably be around 195. I think that's the flat cloud here, as well as psychological support of 200. But it looks really good, super bullish. ETH with the 5200 crosses, again, not bullish yet. The crosses have been kind of late, kind of on time. I mean, if you're watching this ascending triangle, you're expecting a blast off, regardless of the cross here. This cross was very helpful as far as the downtrend beginning. The cross was late as far as the downtrend ending, and it was late as far as this new trend beginning. But again, we've had a lot of volatility here, so it's hard to look at the high time frame EMAs and use them alone as a trading signal. But again, the 200's at 185, the yearly pivot is at 200, so I'd expect some retest of there over the next 2 weeks before massive blast off. If that's not the case, we're headed to 300, which is this yearly pivot horizontal resistance, which is just based on math of the previous year. highs and lows. ETH BTC has been a bit of a jumbly mess. I don't really trade ETH BTC or any BTC pair unless there's really a reason to do so. If the signals are clear on the USD pair, why even bother the BTC pairs? I actually think ETH BTC looks okay for up over the next 90 days, simply because it's above the cloud, it's above the 200, it's consolidating in this huge zone that historically has been support or resistance, so it's kind of a no man's land. And if it can get above this, I think it has a pretty good shot at returning to this previous consolidation area around 035, whatever that is, whatever this VPVR. I mean, it's not like massive rocket science, right? Like, there's overhead resistance. There was a lot of volume here. It's probably gonna go to that level if it heads north, right? Just as it sits, I expect it to be more bullish than bearish, again, because of those trend metrics. Bullish 5200, bullish cloud, all that stuff. So it looks good for up. Obviously today it didn't have a great day, but over the next 90 days, this may outperform, ETH may outperform BTC in the next 90 days, which is what would need to happen for the this pair to move up, obviously. And then just two more charts I've been looking at. Doge, I'm actually in Doge, got in at 29 sats. I think the squeeze has been long enough. Again, this is Bollinger Bands. If it's above the bands while it's squeezing, there's a bullish expectation, hence the green highlight. If it's below the bands during the squeeze, expect bearish continuation, hence the red highlight. It's only ever been this tight two other times in its history. It's got a lot of data. This goes back to 2014. So I think, to me, it was good enough to buy. Maybe I'm crazy, leaving it at BTC halving. Maybe this just goes to zero. I don't know, but it looks like a good trade. Good risk reward to the upside. Somewhere between, certainly above 45 sats. I think 70 to 100 sats is where it wants to go, just historically. It's either above or below those levels when it does move. And then lastly, just looking at XLM again, I really like the Wyckoff accumulation picture for this. It's pretty much met all of the suspected points, and it's back at this high zone, retesting those highs. Have had a bad day today, obviously. It's going to need to consolidate between 850 and 950, I think, before it breaks up. If it does, this would be the markup phase for using the Wyckoфfian language. But overall, I think this looks really good for up. That's all I have for this one. Like, dislike, comment, share, subscribe, hit me up on Twitter, and happy trading.